Hey guys, it's Jerry Green from Value Flow Trading, and today we're going to be answering a big question about fundamental and technical analysis. This question comes up a lot in the industry. Who is it for? How is it best used? And which to most focus on when trading fundamental or technical analysis. So we'll start from a step-by-step comparison, and first we'll be starting with what they are. What is fundamental as opposed to technical analysis? Fundamental analysis has to do with measuring economic events, central bank actions, and political events. Basically, things that has to do with the political and the geographical economy overall, and how that affects or relates to our chart and the pairs or the asset classes we trade. But technical analysis focuses more on the chart, has to do with chart patterns, has to do with using technical indicators that are graphically represented in the chart, candlestick patterns, and so forth. So fundamental analysis focuses on economics, macroeconomics, and then technicals focuses on the charts and the chart patterns, also inculcating technical indicators. Now, the second question is who actually uses it? Well, technical or fundamental analysis can be used throughout any type of trader, but for emphasis, short-term traders rely more on technical analysis, but long-term traders rely more on fundamental analysis. The reason is that short-term traders tend to make use of quick price data to decide where price is going at the current moment or for the day. Short-term traders like scalpers, like day traders, tend to lean more towards technical analysis, but long-term traders like position traders and subsequently swing traders lean more towards fundamental analysis to give them the overall big picture and the macro view. Now, this does not mean that the short-term traders does not incorporate fundamental analysis, but they rely on it in a really small percentage as compared to how the long-term traders actually follow fundamental data and interest. The next comparison we'll be addressing is when. When is technical analysis used, and when is it more better or efficient compared to fundamental analysis? When you want to look for your exits and your entries. Your entries and your exits are done specifically using technical analysis, where your market execution, whether pending order or instant order, where your stop losses, where your take profits will be put, especially when you are trading with an MT4 and MT5 chart. Those things work better with technical analysis. Your technical analysis shows you the level, whereas fundamental analysis helps you determine the long-term trend. It helps you tell the overall picture, are we in an uptrend or are we continuously going to be in an uptrend? The fundamental analyst makes use of fundamental data to determine the long-term macro view. And finally, why is technical analysis more preferred or fundamental analysis more preferred? When it comes to technical analysis, it's easier to understand. It's easier to use. It's easier to explain support and resistance. It's easier to explain chart patterns. It doesn't take a lot to actually explain how a moving average or an RSI or a stochastic works. But when it comes to fundamental analysis now, as opposed to learning what interest rates are, what political data is, and how to inculcate those data in your chart, those things actually are not as easy as it was just reading an RSI indicator. You hear most people say, I don't have a finance degree, cannot learn fundamental analysis, or how do I take what is happening in interest rate and put it and look for exits and entries on our chart. So when it comes to fundamental analysis, it's mostly used by trend followers, it's mostly used by position traders, and it's mostly used by traders who want to hold their trade for a long-term view, because they want to be sure they are with sentiment and with the broader picture. Now, which is better? This brings the question of which is better. Well, using both or inculcating both in your trading is more important, super important. So step out of the debate as to, okay, fundamentals is better, okay, technical is better. I think a healthy blend of the both of them will significantly improve your trading performance. But it also depends on the kind of trader you are, that will now determine how best you now rely on the other to the other. What I mean is, if you are a day trader or a scalper, you want to rely more on technical analysis and what your chart is picture is telling you, but you would not want to ignore fundamental analysis, because if you completely ignore fundamental analysis and you cannot tell that a CPI news is coming out in a few moments, your stop loss or your trading strategy could, it would not work, and then you'll be confused as to how. So you need to get acquainted to fundamental analysis and economic events, even if you're a short-term trader and you just rely on the chart. Then if you're a fundamental analyst that works with long-term trends, you also want to inculcate technical analysis in your chart, because this gives you best levels to enter, best levels to exit, best levels to set your stop loss and your take profit. So if you understand what I'm saying so far, your personality decides which best you rely on. But it also means that, you need to know that that personality will also show you which to focus on more specifically. So this will be all for today's video. Do well to sign up with our trading partner, EQ Markets Global. And if you've not registered with them before, register. They have low spreads, no commission. Cheers, and I'll see you in the next video. Bye-bye.